Meantime, the IPO market showing signs of a thaw with a host of high-profile companies gearing up to go public. British chip designer ARM expected to price just a week from today and targeting a valuation of $52 billion in what many investors hope could be the jumpstart that the listing market needs. Instacart, Klaviyo, and more are expected to price before year's end. Our next guest is an expert in new issues and also is no stranger to our home here at the Nasdaq market site. Let's welcome Nelson Griggs, president of Capital Access Platforms at the Nasdaq. Great to have you with us.
Great to have you back up here. This is awesome.
This is fun,
yeah.
Right? Have you sat on the set before or no?
I've been sitting here for a few weeks waiting for you guys to get back up here.
Don't throw anything in the middle.
Don't throw anything in the middle. No, we're thrilled. It's your 16th year with us, so this feels like it's a cool occasion.
Yeah, 16 years, amazing.
Yeah.
So what does ARM mean for the listings market?
I think ARM is a very unique deal. So of itself doesn't mean that a window opens up, but we're seeing some signs of life. We also are in the Nasdaq private market, and for the first time in probably 18 months, we're seeing significant activity there, institutional activity. So you have that. You have a little bit of pickup in M&A activity, which gives a floor to valuations, and then we are very active pitching. Companies are doing tests in the waters. So we think it sets up probably more of a 2024. Depending on how ARM and the other companies you mentioned perform this fall. So
yeah,
but it's a very big deal.
What are some of the sectors you think will reignite this market?
Yeah, I think
is it going to be AI?
Well, AI is. I spent a lot of time out in California. Most meetings are about with AI companies, but I do think enterprise tech is very well capitalized for the next 12 to, let's call it 18 months or so. So we do see more retail names right now. We see some PE-backed deals. We'll see some tech, but I think tech is probably more of a April, May story of next year than anything sooner than that.
I know you don't want to play stock market, but we will for a second.
Sure.
August volumes for the Nasdaq were great. 7% year over year. I think quarter over quarter, 7% growth. The Adenza acquisition for $10.5 billion, which was significant. It's very accretive. It also gives you visibility. The stock doesn't trade like people understand it. What are people missing?
Well, I think you mentioned the Adenza deal, and we're obviously very hopeful that it closes as we expect it to. And then it's up to us to prove to investors and our clients that they see everything that we see in the deal. Our business, our core business, is performing very well. I manage the corporate businesses as well as investor businesses. So the index business is doing exceptionally well. Our data business is doing well. So the core franchise is doing what we would expect it to do in a market like this. With the acquisition, it's up to us to show again our customers and investors that we're going to deliver.
Nelson, you spoke about the private market. Can you get a little bit deeper?
Sure.
What can the person watching television right now glean from that relationship from the private market to the public markets?
Yeah, no, I'm glad you asked. So you look at the valuation disconnect in the public markets happens every second and is real time. The private markets is a much more slowly moving market. So when there is a market like we have now, it takes a while for those valuations to come together. So for the last 18 months, we really saw almost no activity. What we did see was very small retail trades. Now we're seeing at least 10 times the amount of order flow coming into our platform. There are institutional trades coming. A small handful are at actually a premium to their last round. So we're just, again, seeing that I think the valuations in the privates have reached a level where both the sell side and the buy side are getting to be more comfortable with where they are, which then portends to hopefully a better public market in the IPO landscape.
So Nelson, let me ask you, for the ARM deal, which is gigantic, what's sort of the best case scenario? I don't think it's a giant pop. It's what would sort of be a good underpinning for the market to really for IPOs to come back?
Yeah, I think it would be for the deal to perform well as they're on the road right now, so wouldn't comment on what that looks like. But as they go through their pricing, if it performs at a level where investors digest, it's a very large transaction to digest. And if it performs well, I think it's important not to focus just on ARM because there are other deals as well. So we need to see more of a broad-based performance across the biotechs will go next week, as well as some of the other deals will follow ARM.